Hey, Andrew here from Learn How to Trade Online. This is video 3 of 6 in the free training series that I've put together for you. And what I'm going to do now in this video, I'm going to go and look more at price action. I'm going to look why it's so important. I'm also going to incorporate the moving averages that we looked at in the previous video. So in video 1, we had a bit of an overview. We looked at ringed lows. In this video, we're going to look at ringed lows again in more detail, and we're going to look at ringed highs for downward trend. In video 2, we looked at the 8 and 20 moving average for trend. I'm going to incorporate those two things together to actually give you a trading system that you can use by the end of this session. Okay, so without further ado, let's get stuck in. Well, I'm looking at crude oil on the chart here, and I could be looking at any different market. I'm going to go through some currencies in a little bit, but I'm using this as an example first of all because there's upward trend and downward trend very nicely on one screen to work through. Now, we previously looked at the ringed low pattern back in video 1, and just to jog your memory, this is a potential ringed low. So we don't care about the color of the candle. We don't care about the opens and closes. All we care about is the high and the low of the candlestick. So we must have a lower high and a lower low. And that's a potential signal. And at that point, we're saying if the next candle goes above this second candle, get me into the trade. So for example, if this happens, you get triggered into the position. Okay. Whereas if you placed an order here and this happened, you obviously would not get triggered into the trade. Okay, so we're talking about using pending orders to enter into these positions. Now, you can see on the chart in front of you, you've got an 8 and a 20 moving average. And just before we start looking for these ringed lows in the upward trend, I want to make one final point. What do you notice about price action? So all these different candles. Okay, what do you notice about that and its relationship with moving averages? What do you notice? Well, you should see that price likes to move away from the averages and move back to them. It likes to move away and it likes to move back. And you can see again here, moves away, moves back, and so on. Now, because of that fact, we're only going to look for ringed lows in an upward trend when they occur near the averages. If we get a ringed low occur all the way up here somewhere, then we're not interested because it's not pulled back to the average yet. And we're looking to identify high quality trades, not just every single time we can possibly push the button. So moving averages have crossed over, 8's above 20. We have ourselves an upward trend through here. We're waiting for price to pull back to the moving average. And let me just zoom in and really talk you through this. Okay, you can see here that we do have a lower high, we do have a lower low, but we are not going to trade that ringed low. And the reason why is, again, it's not pulled back to the average yet. Then we have this huge engulfing candle and then lower high, lower low. You place an entry order to buy, but the next candle does not move high enough. Fine, you don't get triggered into the trade. We then have lower high, lower low, entry level. Again, you don't get triggered into the trade. Then we have lower high, lower low, entry level, and hey presto, here you are, you're now getting triggered into the position. So let's just clean this up a little bit. You're going to be entering into the trade. You're of course going to have a stop loss as well. And you're going to have a take profit up there somewhere too. If I could draw a straight line anyway. Now, at the end of this first day, you're going to be upset. You're going to be cursing my name. You're going to be saying none of this stuff works because it's moved in the right direction, but it's pulled back against you. Well, this is a daily chart, so the trades obviously last a little bit longer. And don't expect to be in profit straight away on every single trade. That's not the way that the markets work. So the point is here is that you've not been stopped out. You're currently in a losing position. Hands, sit. All right. Every time you're tempted to close a trade out prematurely, it's a bad idea. All right, you should leave your trades to complete at stop loss or target. It takes the pressure off of you. So we see here we're in the position. We're not happy at the end of the first day. Next day, price jumps up in favor. All of a sudden, I'm back in your good books and you're well on the way towards making money. Fantastic. Okay, so there's our first trade and we have ourselves let's assume that we're risking 1%, okay, to make back 2. So we have ourselves a winning trade here, which should be a plus 2% gain. Fantastic. Now, looking through there, there's no other trade setups near the averages until the one all the way over here. Now, obviously, I'm very used to looking for these, so my eyes are attuned to finding them very quickly. And obviously for yourselves, you're going to have to take a little bit longer to actually identify these signals. But it's like all things. Once you learn how to do it, you do it faster and faster and faster. The more you do anything, the faster you become at it. So looking at the second trade here now, let's just focus in on that one. You're going to enter up here because we have the lower high, we have the lower low, and we get triggered into the trade. And this is a losing trade now. You get stopped out, -1. Now, I'm quite happy with that because if you had a +2 and a -1, you're still ahead. Very, very small data set so far, but you've got 2 trades, 50-50 success rate, and obviously 50-50 losing rate. Now, as the moving averages cross over now, all of a sudden we're shifting, as opposed to looking for those ringed lows in an upward trend, now we're moving down, we're looking for ringed highs. So we need to see a higher high and a higher low. Now that doesn't happen until this candle over here, because we're looking for these ringed highs next to the averages. They must actually be touching or higher. All right, and if I zoom in so you can see it very clearly, let's just focus in on this one. This is the actual signal bar. So we have ourselves a higher high, a higher low, you're entering underneath. You place your entry order, you place your stop loss, and you've been triggered into the trade on this candle here. Now, at the end of the first day, you're not really making anything, not really losing anything. You're kind of hovering around break even. But all of a sudden, a few days later, you can see it's well on the way towards your take profit. And obviously, was a winning trade at 2-1. So just looking at this crude oil chart here, 3 trades, winning trade, losing trade, winning trade. Not, you know, a huge number of winners. I'm showing you losing trades as well because it's very important that you understand that are going to be losing trades. But this is a system and approach that you can take from this video and you can use on daily charts, on big liquid markets, and you can make money with. So let's just go through and look at a few more examples. Let's take a look at a currency pair. Let's say Euro Yen, for example. All right, this is quite a good one to look at because we've got no clean, clear trend on this chart. It's kind of all over the place a little bit, so we can see this, you know, does it work or does it not work, you know, even in a slightly less clean market. So we have the 8 above the 20 through here, upward trend. Price pulls back to the moving averages, and all the way through here, you're going to be placing entry orders to buy. All of these would have been entry orders you'd place, but none of them get triggered. And look, the moving averages, 8 is still above 20. So you're still placing entry orders. And the only reason you're placing entry orders on all these candles is because they've all got this ringed low formation in place. So you'd actually get triggered into the trade here. It moved like 4-1 if you held it for long enough, but you definitely got 2-1 very, very comfortably, winning trade. And the moving averages then cross over. And through here, we're now looking for the ringed high pattern. Okay, unfortunately through there, there's no ringed highs that trigger in that downward trend. So whereas one of the other price action patterns that I trade would have got you into this one, the ringed high itself did not. Okay, so it pulls back to the moving average, which is great, but while you have a higher high, you haven't got a higher low. So remember, ringed highs and ringed lows are one of the 8 patterns that I use, and it was a different pattern that would have got you into this trade. Anyway, after that, moving averages cross over, you can see over here, and price pulls back down to the moving averages, and we're placing an entry order here, but the next candle doesn't move high enough. This is an inside bar now, there's no lower low. This is an engulfing pin bar, there's no trade there. Lower high, lower low, this is your next one. Place the entry order, you still don't get triggered. Again, a lower high and a lower low. Place your entry order, you still don't get triggered, and finally it's this one here. just a lower high, obvious lower low, you get triggered into your trade, and several days later you're very happy with the result. So what does that mean? Well, so far you've had a winning trade, +2, and a second winning trade, +2. Not bad so far. But now, of course, naturally we're going to run into a losing trade. So let's do it in red. We have the lower high, we have the lower low. This is your signal. You'd be entering above, stop loss underneath. You can see that you get triggered into the trade and you get stopped out very quickly in a couple of days' time. And you'd still be placing entry orders on these as well, because nobody knows exactly what's going to happen next. You'd still be looking for that next move up. But as soon as the moving averages cross over, now you're after ringed highs for the way down. Okay, so on the way down here now, moving averages cross over, price pulls back to the moving averages, but we haven't got a ringed high pattern, so no trade there. Price pulls back to the moving average, and we have the higher high, higher low. There's your trade setup. If you missed that one, higher high, higher low, there's another one. If you missed that one, higher high, higher low, there's another one. Any of those three trades all comfortably moved 2 to 1 in your favor. All right, and then at the end here, we took a loss. I took a loss. All right, so higher high, higher low, entered underneath. I got triggered into the trade and got stopped out. And I'm short again now, but that's on a different approach. I had an entry level here on the ringed high, and then this was a different candle formation, one of the ones that I use that's currently moving in the right direction. So results for this kind of messy chart really. Winning trade, winning trade, losing trade, winning trade, winning trade, winning trade, losing trade. Now I would not take all three of these. I actually took this one and this one. I didn't take the third one. And the reason for the second trade was not because it was of a ringed high. It was because of a different pattern there as well. But I took 2 trades short there. I'm just going to count one of them though, okay? Because just working on the ringed highs on the way down, 1 trade at a time, I'll just count one winner. So +2, +2, +2, +6 overall, -1, back to +5, -1, back to +4. But I've shown you on oil, I'm now on euro yen, this stuff works. All right, so there's another good example of you having traded and made money on a currency now. Let's pick on something else. Let's say the Dow Jones. Okay, so we'll go through and look at signals here and see what we can identify. So upward trend, you're looking for ringed lows. Downward trend, you're looking for ringed highs. And obviously now we're back looking for ringed lows again. So through here, we have ourselves the pull back down to the moving average, lower high, lower low. You'd enter into the trade. Everything's going swimmingly well. All of a sudden, bam, you stop that, you trade. So loser. Here's another ringed low, lower high, lower low. You're in the trade, +2. Fantastic. You wouldn't take this trade because you'd already be in this one. So I don't like to duplicate too much risk. So I'd have had a loss here, a +2 win here. But while this one's busy winning, another one sets up, I wouldn't have traded that. It still would have won, but I wouldn't have traded it. Anyway, after that, we pull back down to the average again. We have ourselves a lower high, a lower low. This would be a losing trade. We have ourselves another one, lower high, lower low, another losing trade. Lower high, lower low, winning trade. We pull back down to the averages again, series of lower highs and lower lows. This one triggers another winner. So what does that look like so far then? Well, loss, loss, win, win. So in the upward trend there, loss, win, loss, loss, win, win. So 2, 4, 6, less the 3 losses, you're still ahead overall. And bearing in mind that in the downward trend, you won this trade too. Moving averages crossed over, price pulls back to the averages, gives you a ringed high setup, entry stop loss, 2 to 1, happy days. You've had another winner. But then unfortunately over here, higher high, higher low. You just got triggered into the trade and stopped out. So a loser. But again, winning and losing at 2 to 1 reward to risk makes money. Okay, a 50-50 success rate. But every time you win twice as much. So 2 to 1. That makes very good money. Okay, and you can see for yourself there, I've gone through a stock index. This is the Dow Jones. I've gone through crude oil. I've gone through a currency. So you can see for yourself, this isn't just, you know, me finding perfect charts. I could go to a different one, say Euro USD. This has been really scrappy. Moving averages cross over. We're in downward trend. Here's your ringed high. Here's your winner. Price pulls back to the averages. Another ringed high. Here's a loser. You get triggered into the trade. It gets stopped out. Moving averages cross over, you're back in upward trend, price pulled back to the averages, you get into a trade, starts off well and just goes down and nicks your stop loss. So far you've got a 2-to-1 winner, a loss and a loss. All right, so break even so far. Then we have ourselves a ringed low here, which quite happily won, so +2. Moving averages cross over again, pulls back in, and you're hunting for that move down again. You're placing entry orders until it gets triggered. Here you get triggered. Here's your 2-to-1. Happy days. So you now, you were break even. You're now +2, +4, and this trade's currently running in a profit right now. It's still going in the right direction. So I can't count that as a winner or a loser yet, but it's definitely marching on in the right direction so far. And that's picking a really scrappy chart, the Euro USD. So you can see this works on a variety of different markets, commodities, stock indices, currencies, and it's a trading system that you can actively use right now as of the end of this video. All right, so underneath this video, you'll see a red button. It's kind of an orange red. If you click that, you'll be taken through and you can see exactly what's involved in my Ultimate Trader program. And the whole goal is to get you profitable in 90 days. Through either day trading, the smaller time frames for income. I also show you how to swing trade, the daily charts for long-term wealth. You get trading plan templates, trading simulators, custom indicators, everything that I use in my own trading. And basically, it's a stupidly low price. You can go and see for yourself. It's not anything crazy like other people want to charge 5, 10 grand and silly things like that. And on top of that, I also tell you exactly where I'm getting in and out of trades. I send you trade alerts so you can copy along and follow me. All right, so under this video, click the red button, go take a look, and I'll also see you in the next video as well.